I want to welcome you to the statement of cash flows again. This time we're going to do the indirect method for the operating activities. And this one's not quite as bad, so it'll be a short video compared to the last one. But for the indirect method, what we look at is we start with the net income, and then we have adjustments. And we add back in anything on the income statement that does not require cash coming in or cash going out, such as depreciation expense, that's added back in. Warranty expense, if you do the estimated warranty type liability, that would be a loss on sale of an asset. Okay, things that would be subtracted off would be like a gain on the sale of an asset, because that's not what you received the cash for, so that would be subtracted off. So anything that does not pertain to the operating activities should be added or subtracted off, or does not require cash. But with the indirect method, we start with net income. Okay, net income in our case was $14,490. Okay, now we did have depreciation expense, which you look down here at the bottom, was $8,400. So that would be $8,400 would be added back in, because that was a non-cash item. Okay, so we start, then we make an adjustments to reconcile. You look at your current operating assets and your current operating liabilities. So we just start with accounts receivables. Well, they went from 22,000, so we'll start here. And again, I'll put OK in there because we're going to take care of it. And that was a $2,500 change. Since receivables went up, that's considered a use of cash, and being a use of cash will be subtracted. So if your current operating assets increase, it's deducted. If they decrease, it's added. Now liabilities will be just the opposite. If liabilities increase, they're added. If they decrease, they're subtracted, because think of it as a source or a use of cash. Okay, so next one is inventory, went from 30 to 40,000. So that was an increase of 10,000. So that would be subtracted off because it uses cash. That's how you have to pay more for inventory. Prepaid rent went from 3,000 to 1,500. That's a decrease of 1,500. That will be added. And then we have, okay, so let's see, we have that one taken care of. We have that one taken care of. Well, that's plant and equipment, so that doesn't go down there. So we come down here to accounts payable. Well, accounts payable increased by $1,000. Come over here. Since that payables went up, we add it for $1,000. Okay. So that one's okay now. Interest payable went up $1,000. Well, that's another payable that increased, so that will be added. So that would be $1,000 added to it. Unearned revenue increased by $200. Well, it increased so by $200, so that will be added. And then here we go. Income tax payable decreased by $2,500. Well, since it decreased means we paid money out, so that will be subtracted. Okay, now, there's one thing I want to mention, this next one. See, dividends payable. That is a current liability. But dividends payable is not an operating activity. Dividends, it goes through in financing activities. The dividends paid, so that's a financing activity, so it is not included in here. So what we do here then is we simply add these up like we did before. And when we do this, you notice we get 11,590. Now, if you watch the other video first, or I'll tell you, that's the same answer that we got for the direct method for the operating activities. They will always be the same. If not, it means you have an error somewhere. And this element right here, this on the direct method, it's also required. It's a reconciliation of net income to net cash provided by operating activities, is what it's called. But that it's actually part of the statement, so that will also appear on the direct method as a reconciliation statement to prove out that it's right. But it will be the same answer. Okay, so we just simply start with net income, add back in expenses that did not take cash, and subtract off basically revenue that did not receive cash for, like the sale of assets, the gain of sale of assets, because you got that's an investing activities. So that is the statement of cash flows for the have that as direct, but I'm going to change that real fast, and that should be the indirect method is what this is for. Okay, so that'll be it. This is the indirect method.